So welcome, Perennial Pride listeners. Thanks for joining me as always. So today I'm really excited to talk about this topic about freedom. And, this is come to realize over the course of my life how important that is to have free will and be able to choose our lives. But that doesn't mean it's free, right? You hear that sort of phrase like freedom isn't free. And to me, that means that we have to take our ownership, learn about things and invest in them to discover whether they're right for us and kind of look at things for their face value and then make some judgments on it, right? Because certainly in the world of finances with the plethora of information being bombarded to it's hard to make heads or tails of it, and this you can chat anything up and information so readily available. But what is not always available is sort of the perspective and context around certain things. So sometimes it requires us as intelligent folks to sometimes step away and analyze it and determine kind of what it is and is it still serving us and giving us what we assumed it would around freedom and choice and access and use of our dollars, which is ultimately what I think most people want. And so they're just trying to figure out how best to go about it. And so today I want to cover some areas that I feel in some instances, it's actually entrapped and sort of restricted the folks from building the wealth that they truly want and desire. And it may impact how they operate on a daily basis. And maybe people don't even realize it. So if you're listening today, some of these topics may be controversial, but I want you at least to step back and just have an open mind about them and think about them for your own situations and whether they impact you or not. And so today, hopefully is just that it will give you an eye opener on certain topics. So one of the big traps, and you see it today and you hear enough of it, whether it's our government or companies or individuals, is debt. And debt, we are a debt-fueled system that, back in the day when we got off the gold standard and you can open up the lines of loans and money and flow, it's created a system that, has obviously allowed us to do a lot of things and buy stuff that maybe we can't afford, right? We're kind of pulling forward any future income to now because we want it now. We're kind of a now society. We're in a hurry sort of mode. So the consumer debt system itself has kind of trained us in a way that we can get access to money, even if, the things we want, like we can't afford today, because we can always pay for it over time or build up lots of credit. And we see that we're in some crazy times with the amount of debt that's out there. And, unfortunately, that can work against us in terms of compounding that debt over time. And that can really harm people's ability to save and invest and grow their wealth. And they're kind of stuck in this paycheck to paycheck sort of world. Unfortunately, a lot of folks are in that. And obviously, banks, credit cards, and companies, and even realtors are in the mix of this because they're trying to sell their wares and such that we, quote unquote, have to have. And so we get sort of trapped in this cycle that, endless cycle that we're just kind of always coming from behind, always having to catch up. And that kind of also connects into the student loan system where we're just, people are getting their whatever billions of dollars, trillions of dollars of debt for people, assuming they have to go to school and pursue this degree to get ahead. And you see it today where some folks who are trying to get out, and unfortunately the economy is a little bit shaky. And so, companies are maybe reluctant to maybe hire or have internships, that it's problematic. Some people can't even get jobs. And so, you get into the boat of carrying a lot of debt and you're not even able to create income to support it and pay for it. And that could really cause some longer term damage because people aren't able to buy homes or start businesses, whatever, because they're just kind of hanging on this massive debt on their books that, the income isn't supporting of it. But, that's a trap we get into because we're told we're supposed to have all these things and go after this path and follow the path. Well, for some people, and we all know it, like some people shouldn't go to school, right? It maybe not meant to. The value of education these days is being questioned, especially given the price tag that you see. So it's really something that, stepping back from understanding there's potential other options. And, as I look at it, now having some experience, gone through it personally over my lifetime, is, that those early stages, sometimes kids don't know what they want to do. They haven't experienced enough to know what it is that they're meant to be doing and really appreciate kind of their own unique gifts and talents. But to put people in situations where now I go through school and I have to be, I go to law school and I have to be a lawyer. But what if they really had no passion or love for it, or desire for it, or skill set for it? Really, it probably takes them down the wrong path that's going to waste a bunch of time and probably lead to unfulfilled lives. And so it's sort of this trap that we sort of all fall into, that we're supposed to follow that. But it's almost, in my mind, taking the time and effort to explore yourself and kind of how you see your future and kind of what life you want to lead. Spending more time in there and experiencing it a little bit more probably will be more fruitful in the long run and allow you to sort of accelerate those areas, as opposed to maybe going down a path of something that you're up walking, climbing up the wrong ladder. You just won't find it out until 20 years later. Well, when you want to find that, spend more time up front. So anyway, I'll get off that soapbox with that, but certainly debt in itself can be very damaging and really keep people from really accelerating their wealth and building and saving, investing. So really something to be mindful of. Now, for folks who are thinking more broadly about this, debt can be used to accelerate your wealth building if used strategically, like if you're investing in your business and you use some debt to do that, or a piece of real estate that is levered to some degree with some of your principal, like it could accelerate and maximize your returns if used smartly. You got to use it smartly. Another area that I think can be a trap for many, and it's become a almost like a default. You have to do this to get a job. You have to start contributing the maximum to your retirement account at work, right? That's the default. You get your paperwork. I remember back in the day, I get all the benefits package and all these things that no one really understood or explained all that well. You're supposed to figure it out. Well, most people don't have that level of foundational education around their finances. So you're just kind of blindly going into these things. And so we're taught to just plow as much as humanly possible and into a qualified plan, IRA, 401k, all those things with the thought that immediately I'm going to get a tax savings, quote unquote. And in reality, those dollars are now locked into accounts that are actually government sort of sponsored accounts, right? They're under their rules. And, you can't access them without some level of penalty and such till later in life. And there's no guarantee that will result in a tax savings, because down the road, taxes could be higher, right? You ask any CPA and they might be. So there's no guarantee of any tax savings per se. It's all sort of a possibility. And there's restrictions on use of those dollars along the way. And where do most of those dollars get allocated? Well, they're going to be, tied into the public markets, whether, in the coffers of mutual funds and Wall Street. And that's how it's been set up. Now, I'm not saying you don't put any money into those areas in public markets, right? There is some benefit to it, but we are automatically taught that's where all your dollars should be going. And that's where a lot of people's wealth has been tied up all these years, and we'll go into other aspects of why that could be problematic. But that's what we're taught, what to do and how to approach it, and not think broadly about how we can invest in ourselves, businesses, real estate, other opportunities. It's really really structured and centered and funneled, frankly, into that world. And some people believe it's set up to be almost like a Ponzi scheme, where it's just people automatically funneling money into stocks in companies that, one, they don't know or understand, and whether the valuation of them are proper, it doesn't matter. They're just going to passively flow into it, and the system is built to kind of keep on going until it doesn't. So that's enough on that one. So the fourth area here, in terms of a system that's maybe really entrapped a lot of people, and especially W-2 employees, is the tax system. And the tax system, and most people probably don't have a very positive feel to the tax system. It's taxing for a reason. And for employees, especially those with higher incomes, yes, it is definitely a difficult sort of task here. And those folks who are high income earners in a job are really heavily taxed. because there's really not as much incentive if you're not an investor or a business owner as it relates to the tax system. So it makes it much harder to build wealth over time unless you're making significant wealth. And some people are in that world, but the vast majority are not. And so a lot of money is tied up into the thing we talked about before, the qualified plan that you can really access if opportunities come. And they're really, for the tax system, obviously this is their main source of building revenues and getting revenues to support all the things that our government helps to fund and support. So, it's a very, for some people, and we're at low tax rates right now, they could be eating up, when you factor in the combination of Social Security and Medicare and income tax, property tax. I mean, you could be upward 50+% of the income being sort of directed towards taxes. And so it's something important to consider as you're building your wealth, because, essentially I treat every sort of tax payment as a loss, because every dollar that gets siphoned to go there stops earning for the rest of your life. And so that is a massively big opportunity cost that leaves your world if we're not careful with it. And that's why I'm so keen on trying to figure out how you can reduce tax legally. And there are ways, if you're, have almost a different perspective on it, that the tax code is set up as a set of incentives. So the government is trying to incent us to operate in a unique way. And so if you just understand how they're determining those incentives, then you can legally use the tax code for your benefit, as opposed to being ensnared in this trap and paying out the wazoo for all the taxes. You can find ways to position assets, investments, and how you operate in a way that could be actually tax advantaged, and those could go a long way helping you keep more of your wealth and have more control over it, frankly. So another trap that I can easily see, and this is, again, we've been on this mantra of, I think we're starting to slow down in terms of home ownership, but that's the American dream, right? That was part of the American dream. You're supposed to be able to buy, you live in a world of, back to the first topic around loans, like 30-year mortgages, that doesn't really exist anywhere in this world, right? And so we've gotten this mode of, hey, you got to buy a home. That's the first thing I do once I get out. And I'm not saying that homeownership is a bad thing. It's just that a lot of people's wealth is buried in their home with the expectation it's always going to grow up in value. And it's our sort of, base part of our investments. And, the unfortunate reality is that a lot of people, especially in this day and age, when you think about it, if they have been successful and they've been, paying this off, paying down their mortgage over time, which takes a while if anyone looked at it, right? That you build up some equity, and that equity is basically sitting in your home earning 0% rate of return. And some people can't even access it, right? Whether they don't have a home equity line of credit or, they just never thought of getting one. And even if they had one, there's a portion that's locked up to protect the banks, just in case, the asset values go down or you don't pay your mortgage. So, there's a lot of wealth across the country buried in a home that is illiquid, right? If an opportunity came to your doorstep, then the liquidity is not there unless you have to sell that property. And so, the whole industry around mortgages, real estate is all sort of centered around us and buying a home, and we treat it we call it like an investment. Well, it doesn't create income for you unless you're using it for rental properties, other reasons. I don't know if I call it an investment, because there's no guarantee that goes up in value, and there's very little to no liquidity associated with it or income producing aspect of it unless you're using it for other purposes. So it's really one of those areas that I think sometimes when you reflect on it, and Robert Kiyosaki calls it not an asset, because it doesn't create income. And that's how I treat it. And anyone knows about home ownership and seen it, how expensive it is to maintain a home. And then even if you pay off the mortgage, you still have property tax you got to continue to pay, and insurance. So it's a never ending sort of cycle. And if anyone looked at ever paying a mortgage and the first 7 to 10 years, you're still not even close to paying down that principal, and most of it's actually going to the lender, right? In that scenario, most of the payments. So you're not even like paying down the equity in that scenario fast. So it's a large sort of wealth order if you really looked at it. And again, I'm not saying don't buy a house. I think there is a benefit broadly around it, but just treating it a little bit, thinking about it differently, and maybe reducing the costs associated with your home so you have more wealth and assets to go invest and build income. Another trap or area that is, and I think more people now have kind of come to sort of realize its impact, is around inflation and say even the currency devaluation, these sort of economic sort of theories around what's happening. Well, when inflation is going up, when we had a big hit of it, in the not so recent past, well, things feel different, right? Our money doesn't go as far, and it's basically eroding our wealth, and that hurts our ability when we're trying to save money. That money is actually losing value as we speak on just by letting it sit there, and doesn't have any risk of actual loss in the account, but it is losing value, right? The thought of, hey, that you're a millionaire. Well, everyone knows that $1 million today does not feel that way, right? It does not go as far. Really, you're only as wealthy as how much you can afford to pay for things, right? Your income, like how does it help you support your lifestyle, right? If I have a devalued currency that's constantly being devalued, and there's forecasts that, in the next 10 years, it might go down 50, 75% of your value. So, again, every dollar we have, it looks great on paper and, in our accounts, but the reality is we got to know what it actually purchases, right, and supports our lifestyle. As everything keeps on going up, right, even though our bank accounts and brokerage accounts and IRAs, whatever, go up, it just really matters what it buys us. And if it costs more, then we're actually going backwards. And so we've got to get ahead of those things and think about ways to, inflation proof our assets, at least for some of them, put them in real assets that kind of can go with the tide of inflation too, and try to use that as a sort of benchmark. Because listen, the Fed's already, they, even though we haven't reached the target back down to 2, they expect inflation. They want inflation, right? That's their target. Not sure how they came up with that, whatever, but that's their target. And so it's already designed to start devaluing every year. And so we cannot lose sight of that and be mindful of that, and sort of think about ways to make sure we stay ahead of it with all of our wealth. The next one is, I kind of touched a little bit on it with the taxes, but, we live in this, again, I feel so fortunate to live in this country and have the freedoms that we do have that, a lot of countries don't have. And, I think of my mother, who's now sitting on Social Security. That's primarily her income. And, I do feel very blessed that she's able to have that. But we've grown into a society where a lot of people depend on the government for managing their, say, later years in life, retirement, whatever you want to call it. The safety nets of Social Security, Medicare, all these things that basically unfunded liabilities that our government is just could be hundreds of, $100+ trillion of money that's going to have to come from somewhere to fund these things, that we've now become reliant on those sort of things, and almost in some cases entraps us to sort of not have to sort of ensure that we do those things like save properly, do stuff on our own, because we're going to just say, the government will take care of us. And that to me is a slippery slope. And I think this is where, having our own sort of agency and control of our own wealth is so key and important, because we don't know when that's going to change. And relying on the government to do what's right for the general population you're asking for trouble and probably being disappointed. And so having more reliance on ourselves and our own sort of direction and control of our wealth is so key, and gives us that freedom. And so we don't have to worry about what the government's going to do, right? You don't know if they're going to act in your best behavior, your best interest. And we know that doesn't happen. We know the political swings of people and then wanting to get elected and all those things, and it's easy, can get lost. So trying to remove that from, relying on that will be key to helping you fulfill your own sort of financial freedom. So the last one I want to cover is one that, sometimes it's a fascinating thing, because you hear enough of it around, the financial world, that, whether it's banks, brokerage, insurance, whatever, that there's these hidden fees and, compounding costs associated with that. And, you think about, some of the, maybe brokerages or, assets under management charging 1% and seems very innocuous. I mean, when you look at it with larger portfolios that, they're stripping money out of accounts kind of behind the scenes. It doesn't come out of pocket, so you don't see it or feel it. If you had to stroke a check, I suspect most people would be looking at it much closer. But when things are in the background, they almost go on autopilot, right? And you don't see these costs. But like some of these costs, whether it's buried in mutual funds or, asset fees or whatever it is, like it's important to recognize and understand what they are and know what you're getting in, because those costs can really compound very quickly and take good chunks and percentages of your wealth over time. And it makes it slower in terms of your growth. You may earn 7-8%, but like what's your net out of this to help you grow and build your wealth over time? That could really have a damaging effect if you're not mindful of it. So I'm not saying that those fees and costs are not warranted. Maybe they're doing good service, all those things, but it's just something for you to be mindful of and make sure you're getting the value for, what you're paying for, just like anything else, right? And so knowing what it is, but when it sometimes sits in the behind the scenes and we get into our busy lives and trying to track everything in life, what business, work, family, that these things can get slipped aside and go in the back burner and you may not see them. And you won't know that till 20, 30, 40 years down the road. But those dollars can be massive because just like any fee or tax or, cost, not only it's that cost you pay now, but, what those dollars could have grown to that, no longer work, right? And don't get to compound, right? That concept of compounding works both ways, right? Whether it's cost or, your savings and investments, right? So we want more on that side, on the ladder, so that we can build and compound our wealth under our control, our use and enjoyment, and, having control for us to be able to use whenever we feel like it. So I share all of these things with you. Hopefully this was helpful to give you kind of a broad stroke of them. It's just something to hopefully give you some inspiration to look at what's happening in your own financial life and where there's potential areas that, it's restricted what you can and cannot do. And maybe even in a lot of cases, eroding your wealth to make it very difficult to live essentially the life that you truly want with the amount of freedom you want to have and what you want to do to support your family and legacy. So these are all areas that really I would encourage you to take a closer look, whether you're with your own advisor or your family member, or go seek other advisors to help with that. So hopefully this was helpful, and we'll see you on the next episode of the Perennial Pride podcast. Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life and abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.